Hello, everybody. I wanted to get on here really quick and give information in regards to the subject to purchases of a home. There's been a lot of questions regards to subject twos. My first suggestion is that before you even attempt to do a subject to transaction, you get a whole lot of education on it because it could go really bad if you don't know what you're doing. So, today I'm just going to explain the actual technique and try to give a little more insight on what a subject to is and how to understand it so that when you do, or if you do decide to start doing subject to purchases, you'll understand what you're doing so you can make your seller understand or attempt to make your seller understand what you're trying to do because there's so much unfamiliar there's so much information out here that is probably not correct. I just wanted to give you a little bit of correct information and hopefully it'll make that transition smoother. Okay, first of all, when you transfer a property, when you buy a property, you have a deed and you have a note. That note is your mortgage, which is the collateral part of the transaction. The deed is the actual ownership. Your warranty deed actually transfers your rights, your ownership rights. So you can actually buy a property subject to the mortgage, which is that note part of it. What I'm saying is basically you can buy someone's property, transfer their deed into your name or entity's name, business, LLC, trust, whatever you have, and leave their mortgage in place. Now, make sure you understand what you're doing so you'll cover yourself. Keep in mind, I'm not an attorney. This is for educational purposes only. I am presenting this information from lack of knowledge and questions that are just being asked in the general public, and just trying to give you as much information as I possibly can so you'll understand what you're doing. Once again, when a property transfers, there is a deed transfer, which is the ownership part of it. And then there is a collateral recording, which is the note or the mortgage. So you can buy a property by transferring the deed subject to the current owner's mortgage. What ends up happening is you are putting it in writing that you are going to be responsible for paying that mortgage. Okay, the first question everyone asks is why would anybody want to do that? Why would anyone want to put themselves in that situation? Well, you have several different circumstances. The first one that comes to mind is, of course, foreclosure, especially with the current economic situation, which is going to get a lot worse. Sorry, everybody. Not to be gloom and doom or anything, but it's just where we're headed. And real estate cycles go into 7 to 10 year cycles, so it's normal. We just, some of us who have only been around for a couple years, are not understanding that that is just what it does. It's just like gravity in water. It runs uphill and it runs down. So get used to it if you're going to stay in this market and love it like I do. You'll just get used to it. You'll learn the trends in it and don't worry about it. But anyway, back to subject twos. So what ends up happening is you're buying this property subject to that actual mortgage, and you're making a written statement, a contract with that individual, an agreement, I should say, that you are going to pay that mortgage. And why would someone want to do that? Well, like I said, not just with a foreclosure situation, but say you're someone who has a property. You've had it for years. It's a big property, 5 bedrooms, 4 bathrooms, whatever. And you have a death in your family, a sickness, a illness, retirement, as I am in, or something that is just a life changing situation. And you decide that you want to downsize, but you have this remaining mortgage of, I don't know, maybe 5, 10 years left on it, and you want to go into something smaller. Well, subject to would be a great situation for you if you're not able to sell it outright. Say you want to sell that property to a niece or a nephew or a grandkid that can't qualify for a mortgage. Well, you can actually transfer that property into an entity and basically allow them to continue to pay that mortgage. Now, you have to be very careful what you're doing. there is something called a due on sale clause that is in pretty much every mortgage. So that's why I suggest you getting more education on the subject to process. There are plenty of great YouTube channels out there that will explain to you and provide the information and documentation for you to be able to CYA, cover your assets when performing and actually buying properties this way. My suggestion, Chris Haskins, Mr. Transaction, the Godfather himself, Ron LeGrand, who I learned from 100 years ago, to get as much information as you possibly can about doing a subject to so that you do it the right way. And of course, always seek legal consultation. Now, I will tell you, there are a lot of attorneys that are not familiar with this. So if you're going to seek legal consultation, get with an attorney that is investor friendly, that actually understands it. This is not something that we just made out up out here on the street. This is something that has been going on for a very long time. It is a simple way to purchase a property when you understand what you're doing. Um, Something else I wanted to touch on was the fact that when you transfer a property and you're transferring a deed, you're transferring all seven rights. Nowhere in there does it talk about the actual note itself. So you have to make sure that you get documentation that is signed. And don't try to do this at, your kitchen table or somewhere in the backseat of a car or whatever. You get a title company, you get an attorney, you get it done the right way, and it can be beneficial to you and your seller. So I just wanted to give a little bit of information in regards to that. I am going to eventually do a live session on this and do question and answers so that um, I can get this information out here because I think it's really important, especially for a time like this when a lot of people are losing their jobs and their sickness and their life changing situations that are basically going on. That something like this, I think, would be a great avenue for a seller and a buyer. It could be a win win situation. And it doesn't even have to be a distressed situation. It doesn't even have to be a bad situation. It could just be, like I said, a life changing situation where you need to get out from underneath a mortgage and have a buyer come in and take over the payments and transfer the property. And that's pretty much all I have to say today about subject two. Now, I want to touch on a little bit about lease options, which is another form of seller financing. And by the way, subject to is just a seller financing situation. Whether you want to understand that or believe it or not, it actually is. And the reason why it is because that seller is still keeping that mortgage in place. So they are actually technically still financing that transaction because you're taking over their financing as the subject to buyer. Okay, enough of subject to. All right, lease options. Lease options is very similar. It is a seller financing transaction also, where what you're doing is you're putting the property out for lease with the option for that buyer to buy it at a later date. Now, there is all kind of terms and conditions that could occur with the situation. There could be a larger down payment and then consecutive monthly payments after that. You basically, as the seller, become the bank for that individual. So what you're doing is you're allowing them to buy their property on time. The difference between a lease option and a subject to is there is no deed transfer until that actual terms and conditions are met or completed. So what they're doing is they're basically kind of doing a rent to own situation where they do not own the property, but they're paying you on it until a later date when that sale amount is completed, and then the property would actually transfer into their name. Okay, pros and cons of this situation. Well, of course, just like anything else, there are risks involved. Um, just like with the subject to, if the buyer decides to stop making a payment, of course, it's going to affect that seller. So these are all creative financing types of ways to transfer properties, but you have to keep in mind the reason why there isn't as much qualification as a traditional transfer is because of these cons. these conditions that may not be completely favorable to all parties, but they do exist, and they can exist in great circumstances when your circumstances or your life changing situation may not allow you to transfer, or it could just be a tax savings. If a seller decides to sell a property, lease option, or subject to, there can be tax savings involved in a situation like that too. And sometimes people say, "Oh, no, you don't wanna give up ownership of the property." Well, it just depends on your particular situation. You might be retired and you may not get hit with certain tax, situations as someone else might. So everybody's circumstances is different. So I just wanted to give as much information as I possibly could about, lease options and subject to financing, and I will continue to enlighten you as I have time in my busy lifestyle to do it. Okay, Dr. Realtor signing off. Also, for you all who do not know about it, I will say it again. The economic uh, injury, I'm sorry, the emergency, anyway, it's EIDL loan and grant still exists out there. I guess they're in the process right now of trying to extend some of the things as they're working on the new stimulus package. If you have not already signed up for it, it's real, it does work, there is a grant. You will get it. Can't tell you when you'll get it, but you will get it. I know people who have actually gotten it. And sign up at the SBA.gov and get that information. It's for Uber drivers, it's for Lyft drivers, real estate individuals, wholesalers. There's a lot of help out there for you if in need. And for those of you who need rental assistance, Cleveland Housing Network, if you are in Ohio, Cuyahoga County, is still available, I believe. And I think they will pay up to 3 months rental assistance for those who are in need. So just reach out and try to find out as much as you can and get as educated as you possibly can during this time of economic challenge. And just want to say, I love you guys. I love real estate. Keep learning, keep earning, and keep yourself focused on what really matters, God's intended purpose for your life. Thank you. Have a great day.